Hello and welcome. Yesterday, both the European currency and the British pound gained strong upside momentum against the US dollar. In addition to a recovery in demand for risky assets, equity markets also showed positive dynamics. Market participants took notice of data on Eurozone economic growth. Statistics turn out to be rather upbeat. In the first quarter of 2022, seasonally adjusted GDP increased by 0.3% in the euro area. Compared to the same quarter of last year, its gross domestic product rose by 5.1% above the preliminary estimate. Against this background, the euro managed to gain value. In addition, employment growth was 0.5% quarter-on-quarter and 2.6% year-on-year in the first quarter, in line with analyst expectations. The focus of traders was on US retail sales. Sales grew by 0.9% in April, below the 1% estimate. On an annualized basis, retail sales rose by 0.6% from a gain of 2.1% in March. As a result, the greenback eased while the euro advanced. Eurobonds failed to benefit from data on US retail sales, dragging the price back down. Thus, the euro-dollar pair remained in a channel formed in midday trading. Today's macroeconomic calendar includes data on consumer prices from Great Britain. The UK Consumer Price Index is expected to increase by 2.6% month-on-month in April and hit an annual rate of 9.1%. These indicators are too high for the country, which may lead to further interest rate hikes by Bank of England Governor Andrew Bailey. If British consumer price inflation beats analysts' forecast, the pound sterling will most likely face a steep sell-off and trim all yesterday's gains. Besides, the euro area is set to report data on consumer prices today. If the indicator meets market expectations, the euro may well strengthen. As for the statistics from the United States, the macroeconomic calendar is bereft of any important releases. Of course, traders may take notice of building permits and housing statistics, as well as FOMC member Patrick Harker's speech. However, these reports will hardly be able to support the greenback today. From a technical point of view, the level of 1.0522 acts as support. A false breakout at 1.0515 and 1.0522 will lead to an increase in the volume of long positions. In this case, bulls will make every effort to break above 1.0563. However, if the price goes straight up, its bullish run is likely to be limited, since a false breakout coupled with forming divergence on the MACD indicator will create a strong sell signal. Thus, bears will aim to return the price to 1.0522. Fixation below this level and downbeat data from the euro area will result in a decline to 1.0493. If the price breaks below this mark, the euro-dollar pair will come back to 1.0460. So be careful with long positions, as there are no real driving factors for the European currency yet. Again, only a false breakout at 1.0522 or 1.0493 will make it possible to buy the pair. If bulls manage to push the price above 1.0563, a top-down test of this mark will create a buy signal. In such a case, the euro will have a chance of rising to 1.0602. At this level, traders will be able to go short on the rebound, counting on the intraday correction of 15-20 pips. Alternatively, short positions on the rebound can be considered at 1.0640. Speaking of the British currency, the situation is similar. Amid UK inflation data, the pound sterling may jump to 1.2515. A false breakout at this level and divergence on the MACD indicator will create a sell signal, and bears will strive to regain control of 1.2452. If the price fixes below these marks and tested from the bottom up, the pound-dollar pair will come under strong pressure and slide to 1.2399 and then to 1.2354. At the level of 1.2354, it will be possible to go long on a rebound with a view to catching an intraday correction of 25-30 pips. Long positions at 1.2452 or 1.2399 can be considered only amid a false breakout. As I noted earlier, the economic situation in Britain is rather challenging. Thus, the pair's current upward movement is likely to be temporary, and today's downbeat data from the UK will probably weigh on the pound sterling. Therefore, a return below 1.2452 may fully trim yesterday's gains. If statistics on inflation turn out to be upbeat and the price consolidates above 1.2515, the volume of long positions will increase. In this case, the British pound is expected to gain to 1.2574 and 1.2633. At these levels, it will be possible to go short on a rebound, counting an intraday correction of 35-40 pips. Good luck!